In year of assessment 2022, I got in more than 90,000 of deductions. Today, you're going to hear everything you need to know about tax relief, and I'm going to show you how I actually got to 90,000+ in terms of tax deductions. Last but not least, I'll be sharing with you my plans for year of assessment 2023. So if you're keen, continue watching on. Hi guys, welcome back. Smash the like button early because you know I have the goods, and press on subscribe, especially if you like topics like this that help you in your finances. You'll be firstly hearing on the 6 key methods of tax relief that I use for myself, and there are definitely points that you can consider a bit further to help you reduce some of that personal tax. I'll end off today's discussion by revealing exactly how I've actually gotten more than 90,000 worth of tax deductions, and I'll definitely also review my plan to you, so stay tuned right to the very end. So without further ado, let me share with you the first key tax relief that probably is already found in your own tax bill. This is earned income relief. And I'll actually lump in NSMan relief because these two are pretty automated. If you qualify, they are automatically reflected over there. As you can see over here, earned income relief is $1,000. And I've also gotten for myself $1,500 in terms of NSMan relief. Just in case you're curious, I'm just a normal guy in armor unit. I was not any key appointment holder, so if you are a key appointment holder, you'll definitely be seeing a bigger tax relief. In fact, if you are still serving your reservist, you realize that your tax relief is at a bigger amount, $3,000 and $5,000 respectively. Now the good part also is if you are a wife of a serviceman, you also get $750 worth of tax relief. So all this is automatically inside, and it is something interesting to take note of also. With that, let's move on to the second key relief sector, which is an area that I've seen mistakes happen before, and this regards child relief. Now I'll lump this together with working mother child relief, and in the previous tutorial I've actually shared before, many of my private clients, when I look through their statements, I realized that they have been sloppy on this and it's not optimized. Why do I say so? You know, working mother child relief is a percentage of the mother's earned income. If a mother has 2 children or 3 children and is a high income mom, you realize that 80,000 tax relief cap is actually quite easy to breach. And sometimes parents like to split the child relief, one to the father, one to the mother, but actually that's not optimum because the child tagged to the mother's portion might get wasted in terms of tax relief. So what I did for myself was to move both my children to under my own tax relief because my wife has hit the cap of $80,000. There are steps on IRAS on how you can file it, and if you're unsure, always speak to an IRAS tax officer. With that, let's move on to a third relief that you can tap on, and that is regarding parent relief. Now, parent relief has 2 segments. One is when you stay with your parent, and one is when you don't. There is another side of the quadrant also, which is a normal parent as well as a handicapped parent. My own father is a stroke patient, so I qualified for the 10,000 handicapped parent relief where I do not stay with him. Do know also, if your parent is still actively working, drawing more than $4,000 worth of annual income, this relief does not apply already. But I always do think that old folks are better off working in some form or another. It keeps them entertained, it keeps them active. And there's always workfare bonus. I think these are much better merits than trying to aim for this parent relief. With that out of the way, let's move on to the 4th segment, which is CPF relief. There are 2 segments. I belong to the self-employed segment. I work as an advisor. Many of you guys are in the employed segment. You work with an MNC or you are in government service. Now there's a difference between the CPF relief, and it's something that I can straight away highlight to you also. You'll see that on the left, my CPF relief is way higher at $32,110, correct? That's for year of assessment 2022. And that's because as a self-employed, when I contribute with my own cash, every dollar deposited in can get a tax relief. On the other hand, if you're in the employed segment, you do know that only the employee contribution amount will attract a tax relief, and you'll see that it caps out at about $20,400. This of course reduces also if you are at a higher age group because the CPF contribution is just lesser. Now there's usually a confusion. Hey, isn't the CPF annual limit $37,740? Yes, you can contribute that amounts, but do know again, any voluntary contribution does not have any tax deductions. If you're still confused, as always, leave in the comment sections. I'll try to help pick them up. And again, if you're a beneficiary, help me smash the like button. This is a segment that I'll also be scrutinizing a bit deeper when I plan out my tax deduction strategy for year of assessment 2023. So stay tuned right to the very end. Let's move quickly to the 5th area of tax relief, which is SRS, Supplementary Retirement Scheme. I've been a big advocate of Supplementary Retirement Scheme for a long while. You can see many tutorials on it. Just in case you didn't know whether you should adopt it or not, always look in terms of the tax income bracket you are in. I do believe that anybody that's attracting at least a 7% taxable income already should explore putting monies into SRS. If tax bracket is at 7%, every 10,000 contributed will save $700 in terms of taxes. If tax bracket is at 20%, every $10,000 contributed to SRS will save $2,000 from taxes. This table, do note again, is until year of assessment 2023, because for year of assessment 2024, there's a jump in terms of income tax rate for the highest income earners. To round up this segment, I'd like to show you something I found also, which is a list of the top traded ETFs by SRS investors. These are actually listed ETFs in Singapore, and some of the familiar names include ES3, which is STI ETF. If you're keen to find out a bit more on SRS, I'll leave links above and towards the end of this tutorial, so stay tuned for it. Now let's move on to the sixth area of tax relief, which is cash top-up to CPF, special account, or Medisave. Now previously we used the term RSTU, retirement sub topping up, but right now it's mainly called cash top-up, because from 2022 onwards, the amount is $8,000 instead of $7,000, and you can choose to top up to special account or Medisave account. Either side of cash top-ups will allow you to get tax reliefs. So many of you guys who have been actively working for the last 20 years, you realize that your special account may have been filled up ready to the full retirement sum, and topping up the special account is not available. That's why this new change that allows you to top up to Medisave account is pretty powerful. Anytime there's an insurance deduction, you can use it as a chance to top up to your Medisave up to the basic healthcare sum limit of $66,000. And just in case you're curious what is the BHS limit for 2023, it is $68,500. So quick reminder again, 1st of January onwards, hurry up, go and top up your Medisave by another $2,500 just to squeeze in a bit more tax relief. You can choose to top up also to your loved one's Medisave or retirement account. That is an additional $8,000 worth of tax relief. Do note again that they must not be actively working. So in total from this cash top-up segment, you can squeeze out $16,000 worth of tax relief. But for myself, I'm only maxing out $8,000, whereby I've actually jammed it into my special account as of April 2022. Now if you follow me to here, let me round up the 6 key points first before I show you how I've actually done my own tax deductions for 2022. The first is earned income relief and NSMan relief. The second is children relief. The third is parent relief. This does not apply if your parents are actively still working. The fourth is CPF relief. There is a difference between self-employed and employed. The fifth is SRS, Supplementary Retirement Scheme, and the sixth is cash top-ups to special account or Medisave account up to $8,000. You can get a further $8,000 if you contribute to your loved one's retirement account or special account if they are not working. Coming to here, there is a point that you must know, which is something that needs to be re-highlighted again. The total relief cap is only $80,000. If you have more reliefs at $80,000, it is effectively wasted. So how did I actually get deductions worth $90,000+? The key part is actually in donations. I believe in giving. That's why I've actually set up JOSH TAN Bursary. I shared it before. I've committed to $10,000 a year in this bursary to help 2 needy students for my alma mater, NTU. Do know also every dollar donated gets you 2.5 times that amount if it's an approved charitable organization. But that does not change the amount of tax relief that I'm aiming for year of assessment 2023. Keeping in mind this $80,000 and my commitment to SRS, as well as my contribution already of $8,000 to my special account, I've realized that I shouldn't be contributing the full $37,740 into my CPF as a self-employed. Again, the relief is at $80,000. With Singapore savings bonds and T-bills now paying so high interest, there's really no reason to chuck in extra money through voluntary contribution into CPF anymore. And just in case you're also as a self-employed, I've actually found that they calculate how much you can contribute with a simple press of a button. This shows that after my $3,000 contribution in April, there's still remaining $34,740. But I will not be tapping on that. I'll be aiming for $36,200 so that my total relief is at a flat 80,000 Sui Sui. So hopefully you have found this tutorial useful in some way, and share this with anyone that should see on how to optimize their own tax relief. Because again, any dollar saved in taxes can be invested for your own financial freedom. With that, let me invite you to 2 of my previous tutorials. The first is why I believe that I'll be building at least a $1 million pot in SRS. Some people feel there's no need to have more than $400,000 worth in SRS, but I have a different point of view. Check that tutorial out because it explains fully. The second is my mission in donating. All proceeds from members channel, my investment costs, and my sales of ebooks are all going towards this JOSH TAN bursary. So check out either of these tutorials. Hopefully it can inspire you in your financial journey. And with that, I'll say a big thank you for sticking with me to here, and I'll see you next one. Take care as always. Goodbye.